Hello and welcome to another in the series of Café Insights. I'm Andrew Vine, the Managing Director of the Insight Bureau, and today I'm in conversation with Graeme Maxton. Welcome to Singapore again.
Thank you.
And here we are in the, not exactly a cafe, but in the Tangling Club in Singapore. Now Graeme is a global and Asia economist. He's a well-known speaker and commentator on economic and business challenges around the world. Formerly he worked for the Economist Group. Now is an independent writer, author of a couple of books. The most recent one, very hard-hitting title, The End of Progress, How Economics Has Failed Us, and has recently been admitted as a Fellow of the International Centre of the Club of Rome. Let's start with the global economy. Now, we've just come through a number of very volatile years, but the markets seem to be high. Everyone's talking about a recovery. Is this true? Have we reached the point of a sustainable recovery?
Unfortunately not. I think if you look over the last 6 years, we've seen lots of newspaper headlines saying recovery around the corner, things are looking better, but actually we've seen very weak economic activity in most of the major developed markets in the US, in Europe, and certainly in Japan. And there's nothing that's really, to my mind, going to change that. We're seeing a lot of money being pumped into these economies to try and reflate them, but it's not being put to any useful economic purpose. It's just being flooded into the markets, which is why you're seeing so much liquidity and why you're seeing stock markets booming again. We need to go through some fairly structural changes, some major structural changes, before we can find some more sustainable path. And we need to pay back some of the debts. Now, that's not the case in Asia, but for the world as a whole, no, I don't see that we're going to get out of this very quickly or easily, but that's normal for a recession like this.
I remember listening to one of your speeches where you said, well, of course things look better because the world's been on steroids. These kind of injections have perhaps only postponed the inevitable restructuring that has to happen?
They've certainly postponed it, and they could postpone it for many more years to come, but certainly we've seen interest rates lower than they've ever been in many cases. We've seen incentives for all sorts of industries to try and boost them. We've seen bank bailouts. We've seen injections of cash by governments printing money effectively. And all of those are what's keeping the economy running. It's a bit like a cartoon character which has run off a cliff. We're running furiously, but we're not actually standing on any steady ground. Now, whether or not there will be a crash or we'll simply see a long period of weak economic activity, that's the choice, really. And right now, it looks to me like we're more likely to see a long, slow period of weak activity.
Here we are sitting in Singapore. And last week together we were in Hong Kong running a CEO session. And and if you're sitting in China and other parts of Asia, it does look really very good. Business sentiment is really high, the prospects are good, the economies are kind of heading in the right way. You have the same kind of conversation back in Europe, and to a lesser extent perhaps even America, and the conversation is much different.
Yeah, it does vary very much around the world. If I go to Germany or Austria, then the world is booming. Unemployment's very low, economies are strong, there's not that much debt. If I go to somewhere like Athens, where I was a few weeks ago, the middle class is basically being wiped out by this recession. It's a terrible situation there. The same is true in Ireland and increasingly in places like Portugal and Spain. But you're right, I come here and what recession, what are the problems? It looks like the economies are thundering along. You're seeing huge amounts of cash coming in here, desperately trying to find return and yield. You're seeing the same in China. Of course, they're slowing down slightly. You're not seeing the growth that you saw before, but I don't see that picture changing. You're going to see growth being maintained in Asia and for some considerable years to come.
Yeah. And of course some other fast-moving emerging economies, not just Asia. But it does seem now to be a two-speed global economy.
Yeah, certainly. If you look at the global growth rates, a tiny fraction of the world's growth for the last 5 years has come from the developed world. Most of it, 75-80%, has come from the developing world, and of that, most of that's come from what's called BRICS, and of course most of that's come from China.
Is it sustainable, though, from these newly attractive markets, whether you call them the BRICS and the CIVITs or whatever the next groupings are?
Yeah, I think so, but within reason. We're not going to see the 7, 8, 9, 10% rates of growth that we saw in China for the last few years. We're going to see slower growth. We're going to see more of a shift towards domestic consumption rather than exports and structural investment. So, but there's nothing to stop the momentum. It's just that there's going to be less momentum than there's been before. We will see lots of competition though, because everybody's looking for growth.
But that word growth keeps coming up, and it's come up in our conversation so far probably 25 times.
Yeah.
Everyone is fixated with growth, and I know this is one of the themes in that book that you wrote.
Yeah.
And one of the things that you feel quite strongly is that the kind of growth that we've experienced over the last couple of decades is actually abnormal. We've got to wean ourselves off this.
Yes, if you look at the way we measure progress today, progress of society, progress of humanity, if you pick up any newspaper or listen to any broadcast, we talk about growth the whole time. How can we sustain growth? How can we increase growth? How can we bring back growth? And growth, because of the way our economies are structured, depends on consumption. Most of our economies is consumption. In the US, 70%, in Europe it's more than 60%. And so it's you and me buying more stuff the whole time. And that requires us to use more resources. It also requires us to earn more. We have to have more money in order to consume more. And that means we have to have higher wages, or we have to borrow that money. Now, if you go back over the last 30 years, it has not come from higher wages. Certainly since mid-1990s in the US and most of Europe, real wages have stagnated. But growth has come, and it's come because of borrowing. And so we have this ridiculous situation where progress equals growth, growth equals consumption, and consumption equals debt. And that's why we're in the situation today and why we have to change what we view of as progress.
I know you feel very strongly that there are other factors conspiring against sustainable growth in the future, not least of which is environment and resources.
Absolutely. I mean, we're reaching the point now in terms of simple supply and demand with more than 7 billion people on the planet, rising to 8 billion within a decade, where the demand for the world's raw materials is quickly outstripping the supply in some areas, in energy, in water. The reason that we're digging up all these tar sands in Canada and looking for shale oil in America and drilling 200 miles off the coast of Brazil is because the easy-to-access oil has mostly gone. And we're going to see that energy prices and raw materials prices will rise steadily. And over the long term, that will be a drag on growth around the world. And that's because we're using them irresponsibly. We're wasting them to a great extent.
I guess the big hope is that we can find either technology or other ways of becoming much more efficient, get higher productivity from, rather than just consuming more. What are your feelings about that? How optimistic are you that we could actually do that?
I mean, this is a very common argument, and technology will answer some of our problems. Fundamentally, we don't have an energy problem on this planet. I mean, there's enough sunlight hitting the planet every day. We just don't know how to use it properly yet. There are some constraints with some raw materials, though. We're reaching critical levels with some raw materials, and we will in the next 10 years. And it's a question of physics and chemistry. We can't recreate those chemicals. We're going to have struggle, I think, to find technical solutions to those. Also, when you look at the way we undervalue the world's resources, the debt problems that we've got, the gap between rich and poor, the greed that we've unleashed in the last 30 years, technology is not going to solve those. We need structural change to the way we think about our societies and our economies to fix those problems.
I did hear the other day from someone that the growing population could be viewed as an opportunity, not viewed as mouths to feed, but brains to solve our problems. Do you think that's realistic?
There's a lot of evidence that our rate of innovation is actually in decline, that it peaked more than 100 years ago, and that considering the number of people on the planet, that the number of innovations that we're making is lower than it's been for decades, and if it carries on at current trends, we'll be back at Middle Ages type levels by about the middle of the next decade. So I think we're not actually being as smart as we think we are. We're not developing the principles of flight or discovering new planets or discovering new parts of the planet. We're discovering small incremental developments to iPhones, and we regard that as being clever. Now, there are some exceptions like the Hadron Collider, but we're not doing the fundamental research that we really need to do to move our species forward.
I mean, looking at the many challenges that humanity faces, it's kind of daunting. And as individuals or as people in companies running their businesses, a lot of people are scratching their heads saying, well, I'm not quite sure what our role is in this. But certainly there are implications for businesses trying to plan for the long term, their long-term strategies, if what you say is correct, and we should be getting used to a much lower ability to grow just like that. It might take new thinking to be able to find ways of making profit where profit is just not going to fall off the tree.
Yeah, I mean, I think in 2007, 2008, when this recession began, we actually reached the end of an economic era, and we need to think differently going forward. Now, that's not to say that some businesses can't continue running as they've done for a long time, but there are others that are going to face some fundamental challenges. Climate change is going to bring a lot of opportunities for us to respond to the symptoms of climate change, but also a lot of difficulties for a great many people. So, yes, I think we're in a different era. The era of continuously reducing cost, which we've got used to for the last 30 years for most of our products, is now I think, going to trend the other way. Labour costs, commodities prices, land prices, regulations, openness of trade, all of those are now flipping the other way. You look at places like China where wages are going up now. So I think we need to be more creative, we need to think differently, we need to be aware that markets are going to be more volatile, and we need to think in different ways if we're going to be as successful as we were in the past. That's not to say there's no growth, it's just that we have to approach it differently.
Well, it's great talking to you about the challenges that we face and the kind of perspective you have on things. Thank you very much for spending a bit of time with me today, Graeme, and all the best as you fly back to Vienna.
Thank you, Andrew.